So due diligence questionnaires. When folks think of AIMA, it's still, oftentimes they think of the AIMA DDQ. So let's unpack what that actually means. So again, DDQ simply means a due diligence questionnaire. This is a document that gets into greater depth about an investment strategy, about the investment manager themselves, about the fund terms and details. It typically in the process will come somewhere after you've established there's real interest in taking this further. It's, like anything, it's defining the relationship. Okay, we've had the first introductory call, maybe one or two. The investor will then want to do a little bit of extra work. And it's, we'll see where it goes. It doesn't necessarily mean that you're getting a check, but usually it's something that, when you have that first introduction, you're going to be sending over some initial materials, which are probably some of your fact sheets, historical letters, and your pitch book. And then this is, a nice meaty document that, as I said, gets into both the investment side of the business, as well as importantly, the operational side of the business. It can be really tedious because you look at this thing and it's asking you for a lot of information. When I was in the seat, what would always be frustrating is you would fill it out, send it to an investor, and someone else would ask you, but they would ask you for it in just a slightly different way. So instead of asking your PM how many years of experience he or she had in this role or at this firm, the next person would ask you, in which year did they begin? It's like same information, but slightly different. And even if it is just a simple copy and paste, it's not an efficient use of time. It's something that it'll require you as an investment manager to take longer to reply to this questionnaire, and there's a greater risk of mistakes. Plus, I think we've all agreed at this point that there are better things that everybody can be doing with their time than copying and pasting. So this has led to an understandable desire to standardize the process. AIMA took this attempt in hedge funds in 1997. Our first DDQ was unveiled in that year. A member committee helped develop it. It was 10 pages, and everybody complained at how invasive it was. Today, one would have to laugh because 10 pages seems laughably short as the industry has continued to evolve, and there have been more and more questions from allocators. We've continued to update our questionnaire over the years to both streamline it as well as reflect the diversity of strategies we have within our organization, or I should say within our industry. So I think the earliest iteration of the AIMA standard DDQ was focused more on plain vanilla hedge fund strategies, be that global macro or long short equity. But then investors keep unturning new investment strategies, and they don't necessarily neatly fit within that structure. Furthermore, the business isn't always neatly fitting within that structure. Folks are launching managed accounts, funds of one. More and more folks are doing private market investing in a closed-end vehicle. So we really put our heads together, back to the drawing board in 2017 to make something that became modular. So we really broke the due diligence questionnaire process into its component parts. We figured that everybody needs to have a basic level of information about the investment manager, and most of that is going to hold regardless of strategy or regardless of fund vehicle. So these are things about the entity as a whole, the governance structure, some of the service providers to the fund manager. So that's sort of the core set of questions. You then get into the investment strategy. So, we have our sort of classic hedge fund strategy, but there's also strategies for fund of funds. There are strategies for more systematic, quantitatively driven strategies. We've built out some strategies for private markets, and we're actually further refining that right now in a process with ILPA when it comes to private credit. We're just about to embark on a new DDQ, an investment strategy for digital asset funds, because that's been a popular request over the years. And then finally, you come back to the end and it's fund structure. So as I noted, you have your open-ended private fund, you have a closed-end private fund, and you have managed accounts. So you can put these building blocks together because some larger firms might have multiple strategies, might have multiple funds, and that's a way that they're able to keep themselves perhaps a little better organized. Now, another trend that has certainly swept our industry across everything from investments to operations has been digitization. So, we recognize that it's probably not terribly efficient to send folks a PDF version of a Word document, but we still do have members who prefer to use that analog technology, and we support it. Furthermore, though, we have licensed the DDQ on various technology platforms for allocators or fund managers that might want to have a more seamless digital experience. So for folks that want it, it is out there on various commercial products, and we're happy to support that, even if we aren't there in collecting the responses. Because I think the important thing to remember is AIMA's role is really curating the question set, not getting the data. Our thesis is there's about 80% of information that is pretty much common to everyone, and everyone will need to know. There will be allocators who might ask for certain information above and beyond because of their legal or corporate entity structures. And there will be fund managers who perhaps have frequently asked questions that aren't reflected in our question set because of their unique structure or their unique investment strategy, and there's spaces to add that on. But what we really want to capture is that 80% of information that is the same and common to everything, allow allocators to have a better apples to apples comparison, and make it easier on the poor investor relations analyst who has to compile all of this information, because it's not an easy lift. That said, I think there's also, I talked a little bit about how the investment strategies have been added on, with private markets being an area of focus and more recently digital assets. There's also been other aspects that have gotten more scrutiny, and we try to evolve and add that functionality. Certainly, ESG has been a big area of focus, and we've aligned ourselves with PRI's question set so that we can help with that standardization of data. Again, it's something everyone asks for, and there's a lot of unnecessary work and duplication because of all different data standards. So we're trying to make it easy on folks and adopt an industry standard when it comes to that. So we have an optional DDQ when it comes to ESG. We have another question set that we've developed with Elborn when it comes to DE&I policies and diversity of your workforce. Again, we used the ILPA questionnaire as our starting point when it came to that, so that it can also be a more easily transpositioned when you move out of private equity into other alternative asset classes. And then cybersecurity has also been a huge area of focus. So we've worked with ATAC, which is a buy-side technologist association, on a data vendor DDQ. This has been available for a number of years, and it really meant to streamline the process, but it can also be used on the investment manager themselves to articulate their cybersecurity stance. So it's a living, evolving document. We're always welcoming feedback because we're always preparing for the next iteration. We try not to update it more than every few years because we know how much work goes into it from investment managers and allocators to adopt it. So we don't want to be over aggressive, but we also need to make sure that we continue to make it fit for purpose.